This week was a roller coaster for mortgage rate expectations. We started with consumer inflation, and that was mostly in line with what the markets were expecting. Tariffs aren't really showing up in consumer prices just yet, and companies do seem to be kind of eating some of those costs, but nobody really expects that to continue forever. And the question is if they're going to start passing them on to consumers, and if that happens, how will it show up in future inflation reports? This could make the Fed more cautious about cutting rates or keep the momentum with more Fed members wanting to cut. And then later we got the wholesale inflation report, and it was pretty ugly. Prices at the wholesale levels did jump the most we've seen in over 2 years, mostly in the services sector. And this really matters because these costs often trickle down to consumers, and it is a sign that tariffs could be putting pressure on prices in the supply chain. And that report did kind of reverse some of the excitement we've seen recently about the possibility of bigger or faster Fed rate cuts. Retail sales did show consumers are still spending, despite higher credit card debt and lower savings rates. But this could be going on credit cards and buy now, pay later services. So this might look like strengthening the economy, but probably won't last long term. Fed officials were all over the place this week. Some hinted that they're ready to cut in September, while others are still worried about inflation creeping back up, and nobody's really committing to a bigger 50 basis point cut that they should probably be making. Markets are still expecting at least 2 cuts this year, with the first being in September, but the case for a half-point cut, like I said, is lower after the news this week. On the housing side, we saw applications to refinance jump a ton. It was the strongest since last April. And we have seen rates, show some improvement, and the media has really been cheering that on, even though the market really hasn't moved that much. And this is a good time for agents to check in with past clients about whether a refinance really makes sense for them. I'm happy to help with providing the true cost of refinancing and creating a custom refi watch list for you to send to your sphere. Delinquency rate on mortgages actually dropped last quarter, showing most homeowners are still in good shape despite the economy cooling, and this is in a way supportive of home prices. But bottom line, the Fed is still likely to cut in September, but how much depends on what's going to happen with inflation, jobs, and the global economy over the next few weeks. Next week's going to be a big one. We've got the Fed meeting minutes coming out. We're going to get more housing news, as well as Jerome Powell's speech from the Jackson Hole Symposium. So I'll be back next week.